Welcome. This is part 3 of the video series. This is going to focus on the minor crops in ARC-IC, the types of farms that might find that valuable, all as part of the video series for my 2022 ARC and PL sign-up recommendations for Wisconsin farmers. So we're going to focus on recommendations for our minor crops, sorghum, barley, and sunflower seed, and then focus on farms that might find ARC-IC a useful option. These are the minor crops that have base acres here in the state, sorghum, barley, and sunflowers, and the reference prices, and then projected prices from 2021, and then are also our 2022 projected prices. You see the reference prices for sorghum are a little bit higher than corn, $3.95, barley's at $4.95, sunflowers at 20 cents a pound. And we have the projected prices for 2021. We don't know projected prices for sunflowers in 2022, but the other two, the USDA has long-term projections that came out in November. $4.70 for sorghum and $5.15 for barley. So both above that reference price again. Sunflowers is an oilseed crop, the sunflower seed, and so it follows the soybean trends, some of the same trends. But so I would expect it to be above that 20-cent price expectations for 2022 as well, but lower than 31 cents. So here's the data, like those other plots I showed with the reference price and then the prices, the marking average prices over the last several years. In sorghum, again, is well above, just like corn, the reference price. So my recommendation here is fairly straightforward. Take the ARC-CO. Probably not going to pay. The PLC won't pay. ARC-CO maybe will pay if you have a low county yield. And so if you want to try to get a payment sorghum on sorghum base, I would recommend the ARC-CO, and maybe sorghum yields and the price will be low in your county and you'll trigger a payment, but I wouldn't expect a large payment. Barley is a lot closer to the reference price there. It's just 15 cents above, and this one's kind of I'm on the fence between it. Either one is probably a fine option. You'll know your own county's yield history better than I would for barley. Most of barley is driven by things that happen elsewhere for prices and production because of all the acres out west. It's a small acre crop here in the state, so our yields don't affect the national price. And there's a lot of international demand that drives the price as well. So I'm kind of on the fence, given that the expectations are 15 cents above the price floor, the reference price. I'm leaning towards ARC-CO. Sunflower seed, as I said, we don't have the 2022 expectations, but you can see they follow the soybean market as an oil seed and jumped quite large there in 2021. I anticipate the 2022 prices to remain above that reference price of 20 cents a pound. So I'm leaning towards ARC-CO for sunflower seed here in the state for base acres. So kind of summarizing these minor crops, and like I said, barley is the one I'm kind of back and forth on. So much of what happens that drives those national marketing average prices happens elsewhere and depends on global issues. The guarantees are going to be calculated using the reference prices, so they might be a little higher. But I say the reference price is not, or I'm sorry, the expected price is not that far above the reference price. So either one's probably a fine option. You'll know your local county yields better and how often those reference or those yields come down, and maybe it would trigger a local payment. Sunflowers, I'm leaning towards ARC-CO because of the just the high price expectations, likely still substantially above that 20 cents per pound base or reference price. Now, the last part of this is look at ARC-IC. I want to spend a few minutes. I haven't spent much on it because it's not a particularly popular policy. Early on, the first time, there was a lot of interest in ARC-IC because of the 2019 prevented plant, but those issues are behind us, thankfully. So, but there are still some farms who might find ARC-IC valuable. And so quickly, what kind of farms are those? You have an FSA farm with highly variable yields from year to year. Your ARC-IC benchmark yield is much higher than the ARC-CO county yield and your PLC payment yields that you have. The last one would be those who have a lot of vegetable acres, more than 50% of your base acres on an FSA farm. So when yields are highly variable, the county yield ARC-CO won't pay. Maybe you can try to use it as kind of like an insurance policy and use it like ARC-IC. And often ones that are going to be highly variable are going to be FSA farms that are smaller, a few acres, and often only a single crop. And then they'll be more subject to that. And you might be able to get a few more larger payments with ARC-IC, but with a few acres, you're not going to get a lot of payments anyway. So it might be useful. ARC-IC might be useful for those with smaller FSA farms and a single crop. Maybe you're a part-time farmer, you don't have a lot of acres. So some extra money on your small FSA farms might be valuable to look at ARC-IC. The other one is if your ARC-IC benchmark yield is sort of kind of like it's used to calculate your yield guarantee, is much higher than the ARC-CO county yield and those payment yields for PLC. This is unlikely for most farms, but the only group I can think of that might have it is if you have an FSA farm in one of the few irrigated farms in a county, and there's not the irrigated option for ARC-CO in your county. I have a map here. Well, I can look at it now. These are the counties in the state that have irrigation options for corn and soybeans. If you have a irrigation, have some high yields, benchmark yields for your ARC, you can get for your ARC-IC, and you're not in one of the green counties or the blue counties for your soybean, you might want to look at ARC-IC as a way to capture some of that value, the benefits of having that coverage more tied to what your yield, your own yield levels. The last one is those who have a lot of vegetable production area acres. Both ARC and PLC pay on 85% of base acres. That 15% of acres that aren't paid on, that's called the non-payment acres. It's all part of the formula. ARC-IC uses 65% of base acres and has a 35% non-payment acres. In that situation, if you're between that 15 and 35%, you could get payments for more acres if you signed up for ARC-IC. So for example, you're a farm with 40 base acres, and so you can plant up to 40 times 15% or 6 acres of processing vegetables and not affect your ARC-CO payments or your PLC payments. But if you have more than that, if you enroll in ARC-IC, that same farm can now plant up to 14 acres of processing vegetables in that FSA farm and still not affect your ARC-IC payments. So there's some chances there that you might want to look at using ARC-IC if you have a lot of vegetable acres that would normally keep you from getting ARC payments.